From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for July 19, 2018. Today we're looking at the EURUSD, the euro, versus the US dollar for today's trade analysis. This currency pair has been primarily moving lower over the past several weeks. We can see that along the black trend line. Lower highs gives us a sense that the market is more bearish than bullish at the current moment. We haven't really seen a new lower low yet though. That orange shaded area at the very bottom of the chart, 1.1560, 1.1535, holding support over the past couple of attempts down here at the low. So the downtrend continues if we can break these last lows into the mid 1.1500s. Otherwise, we are finding the market finding support there into that orange shaded area. But again, lower highs gives us a sense of a bearish market here for the euro dollar. And it's been moving down really for the past several months, going all the way back to the beginning of the year into January at the top of the chart. US dollar taking a nice surge over the past 24 hours, sending the euro dollar lower through the 1.1645, 1.1620 level, the yellow shaded area, which held as support over the past 3 or 4 days. Let's go ahead and zoom it in a little bit here on the daily time frame and begin looking at this yellow shaded area here, where the market found support into that yellow zone for the past few days. 1.164520. Found support here along that blue candle, bounced back up to the blue zone. Yesterday found support here, couldn't break through it with any significant effort through there. We've actually seen this many times before here on the euro dollar. We've seen it right here where it found its support into that yellow zone. We see it back here where we find support into the yellow zone. In that area, we also see, by the way, not only support over there, but all the way back here in history. If I can get this line moved back to where it was supposed to be and put a circle back here, you can see that back here in history where we've seen support here before on the way up. So several times finding support into that yellow zone. Then you bring it over here and take a look at a little bit of a different situation. I'm going to draw out a little circle here. And let's make it a different color. Let's make it blue, just so I can call it something different. Then you look right here where the blue circle is, and you can see resistance into that same yellow zone. So we can see historically there's factual, statistical area of decision, support and resistance here in between 1.1620 and 45. The yellow zone. The black circle shows support, blue circle shows resistance. So if the market is making trading decisions here to buy, sell, enter, and exit as support or resistance, then we might expect it to continue to do that into the future. So that gives us an opportunity as traders who really don't have any control over what the market's doing. It gives us an opportunity to make our trading decision at a familiar area that the market has made trading decisions before, which happens to be this yellow shaded area that we're highlighting today. As you can see today, we are pushing through it. We are now underneath that yellow zone. So that same zone that we just highlighted in history as resistance and support now becomes, once we're underneath it, our resistance. We don't expect it. Now our expectation increases that it's going to continue to go lower, and we don't expect it to get back above there. That's the risk in this situation, is that it turns around and goes right back up. So as long as it's underneath it, we're looking for opportunities for it to stay underneath it and potentially take a short, targeting where? Back down to the orange shaded area. Why would we target the orange zone? Well, the last time we got underneath the yellow zone, it went to the orange zone. So our opportunity really today, as long as it stays under the yellow zone, look for a short, target the orange shaded area. Our risk, pretty simple. We just don't want it to get back above that yellow zone. So our stop loss would be just above the yellow zone. That way, if it does suddenly turn around and go back in the other direction, we limit the impact to our trading account and take advantage of the profit if it goes down to the orange shaded area. Take it down to the 4-hour time frame, and again we can see it clearly underneath right now the yellow shaded area. So again, the strategy is selling underneath the yellow zone as long as it stays underneath there, targeting back down to the orange zone that we discussed here a few moments ago at the very bottom of the chart, which by the way is at 1.1560. And the risk is it turns back around and gets back above the yellow shaded area today for the euro dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.